How to stay calm during big gains. This is Bill Scheid from Applied Finance Research, and that's the topic we're going to cover in this video. This month, our position in gold jumped 25% in 18 days, and just a few months back, our position in PBW climbed 40% in just over 2 months. These are the kind of gains that our monthly systems were designed to capture, but they also come with their own challenges. A lot of traders worry about big losses, but actually big gains can be just as destabilizing psychologically and emotionally. So in this video, we're going to talk about what it takes to stay calm and stay disciplined when your system is winning big. And the things that we're going to talk about in this video apply to any system, not just the monthly systems that we're currently teaching and trading. So first up, how to stay calm during big gains is understand the range of normal performance for your system. So for example, here we're looking at the back test of BMR 21. That's the monthly system that works on momentum. And if we look at the bottom here, we see that the best period is 28.73% and the worst period is minus 12.85%. And here periods mean months. So if we have a gain of 25% in one position, BMR 21 typically holds two positions, so we're looking at 12% in a month, which compared to our overall best period is actually not a huge outlier. So that can help us stay calm when we're looking at a big gain. And also we want to understand the range of normal performance when we zoom out. This back test is 2007 to 2026. We see that we have a very nice CAGR, 14.4% when compared to the S&P, and our drawdown is much lower than the S&P. Actually, that's the same drawdown as 60-40 buy and hold. So we're beating the S&P on return and on maximum drawdown. So if we hit a volatile month, we can relax and know that the overall range and average of our system is actually quite good. Talking about understanding the range of normal performance for our system, when we look at BMR 21 in 2020, this was the year of the COVID crash, we see some very large numbers: 28.73, 16.5, 10.9, 10.74, 10.21. We also see a minus 11%. So we know that the returns that we're seeing with gold and PBW are not outliers. It's actually how the system performs when there is volatility in the market. So understanding that range of normal performance for our system can really help us stay calm, stay grounded, and have a healthy perspective. Second up is understanding what your system does and does not do. So what monthly systems don't do: they don't maximize the profit on every position, they don't catch perfect bottoms and tops, and they don't promise profitability every month. What monthly systems have already done in all kinds of market types since 2007 is produce profitable positions around 60 to 65% a month, and that depends on which monthly system we're talking about. Delivered benchmark beating CAGRs, often in the teens. For example, BMR 21, like we just looked at, 14.4% CAGR versus the S&P coming in at 11.1%. And also, monthly systems have limited maximum drawdowns that are often well below benchmarks. Again, BMR 21, we just saw minus 34.3% versus S&P coming in at minus 52.3%. So if we know that our system is not going to catch every perfect bottom and every perfect top, but we understand how the system does perform, then again, that gives us perspective to help us stay calm. Number three, if you can't follow the rules, reduce your size. That's something that I learned from Dr. Ken Long at Tortoise Capital Management. And why it works is because emotional pressure creates lack of discipline, and lack of discipline creates mistakes, where a mistake is defined by not following your written rules. So if you reduce your size, that helps to reduce emotional pressure. Number 4, have a system of systems. Having only one system creates a real sense of emotional pressure around the performance of that system because all of your eggs are in one basket. If you allocate your capital across systems, that effectively reduces the size of the positions for any given system. And if one system is underperforming, other systems will balance out the performance of the total portfolio. So the net result is that you are much less emotionally invested in the performance of any given system, and especially any given trade. Who cares what happens in this trade, and really who cares what happens with the performance of this system? If we've got a system of systems, we're much less emotionally invested. And on the upside, I'm finding in my own trading and my own research, a system of systems gives you a smoother equity curve, reduces the drawdowns, and reduces the overall volatility of your total portfolio performance. Next up, don't stare at your brokerage account. Watching your account balance tick up and down is psychological torture, and you're just inviting trouble by doing that. This leads to increased emotional pressure, increased cognitive load, increased fatigue, and eventually is going to cause you to make a mistake by not following your rules. So skip the drama, avoid the mistakes, check your balance as and when it's reasonable, rational, and appropriate. For me, when I trade monthly systems, I check the balance at the end of the month when I'm rebalancing, but I don't stare at it day to day, hour to hour, minute to minute. That is not productive behavior. Number 6, think in percent terms. This is something that I learned from Lawrence Bensdorp that he suggests in his books about automated systems trading. The idea is that if the dollar value of the changes in your account causes you stress, try thinking in terms of percent. So did you make $25,000 or did you gain 2.5%? Did you lose $15,000 or did you lose 1.5%? You know, if you have a loss of 15,000, you could easily get into, oh my God, think about all the stuff I could have bought with 15,000. But if you reframe that as, oh, I lost 1.5%, that can help take the pressure off. And if you're going to trade at a size that makes a difference to your overall bottom line, you need the consistency of performance that comes from discipline and calm. And thinking in terms of percent can be of help in that regard. And last but not least, remember, especially for monthly systems, that rebalancing helps lock in profits. When our monthly systems rebalance each month, profits from large profitable positions are trimmed and then redistributed. So that helps lock in profits, and it can reduce the psychological pressure around big wins. And this functionality is baked into our systems, and it's there for a reason. I have back-tested configurations where you only rebalance once a year. It turns out that monthly rebalancing actually works better, and it has the psychological benefit of reducing the pressure around big open gains. I will also say, don't skip monthly rebalancing and don't be late with it. Just in the last few months, I've talked to several monthly system students, one of whom decided that they would skip rebalancing 1 month, and that generated a pretty large loss. And another one who was traveling on rebalancing day and decided, I'll just get to it tomorrow, and that cost him 1% or 2%, which is better than, I think it was a 15 or 20% loss from the first trader who decided they would skip a month. So be disciplined, follow the rules, and stay calm. At the end of the day, what we want to do is have a clear framework and a clear process for staying grounded, both in the face of big losses and during big gains. This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy trading.